Melbourne is about to boom. Now, something's about to shift in the Australian property market, and it's not happening where you think. There's one city that's actually been in the shadows for years, written off by investors, overlooked in the headlines, but the latest data is telling a completely different story. And here's the kicker. We actually called this months ago, and now one of the big four research companies has put their name to it as well. This could be the start of a 2-year run that changes the game for buyers and investors. So let's unpack it. Hey guys, Scott Kuru here. Welcome to your daily property update. This is your quick 3 to 5 minute rundown on the Aussie property market. If you're buying, investing, if you just want to stay ahead of the curve and invest like an insider, I cut through the noise so you know exactly what matters. Make sure you hit like and subscribe and tap the bell so you never miss the next one. KPMG just dropped their updated property forecast for 25 and 26, and they've completely torn up January numbers. Why? Because the RBA surprised everyone with 2 early rate cuts in February and May, and that's poured rocket fuel into buyer confidence. Nationally, KPMG now sees house prices rising 4.9% this year and another 4.5% next year. Units are the quiet achiever, 4.5% growth in 2025, climbing to 5.1% in 2026, as affordability pushes more buyers towards townhouses and apartments. So which market is set to lead the pack? It is Melbourne. Yes, the same Melbourne that's been lagging behind Sydney, Brisbane, and Perth, and even Adelaide since 2022 is now forecast to be the top performer in 2026. KPMG is calling 5.2% house price growth this year, accelerating to 6.6% next year. Units, they're set to double their growth rate from 3.6% in 25 to a huge 7.1% in 2026. If that plays out, that's around 110K added to the median house price in Melbourne. That's not just a recovery, that is a statement. Now, there are 3 big drivers. 1, the affordability gap. Melbourne is still significantly cheaper than Sydney, and that gap can't stay this wide forever. Check out this chart that looks at that gap over time. You can see that the gap between Sydney and Melbourne is now at an all-time high. Population growth. Melbourne's a magnet for overseas arrivals, which means more demand. Simple as that. Sentiment shift. After a few tough years, confidence is returning. Yes, Victoria's land tax changes are keeping some investors away, but that just means less competition for smart buyers getting in early. Don't forget, we're still building nowhere near enough homes. KPMG expects that just 160,000 new dwellings a year for the next 2 years. That's 30% below the National Housing Accord's 240,000 target. With supply strangled like that, it's very hard for prices to go anywhere but up. Look at these projections for Melbourne's housing supply. Look at these projections for Melbourne's population growth. Now, we did call it first. Freedom did call it first. Here's the thing. At Freedom, we've been saying for months that Melbourne's time is coming. While other voices were still hyping last year's winners, we showed you the fundamentals that pointed to Melbourne's turnaround. If you want proof, check the link in the description. You'll see the videos where we called this before KPMG put their name to it. If you're buying to live, this could be your window to get in before momentum really builds. If you're investing, keep a close eye on those affordable Melbourne markets and definitely do not discount apartments. And remember, momentum in property is powerful. Once it starts, it doesn't stop overnight. So where would you drop your money right now? Drop a comment below and let's talk strategy. If you want to invest like a property insider, not just follow the headlines, hit like, subscribe, and I'll see you at the next property update. Take care, guys. See you tomorrow.